Hi, welcome back, and in this episode I'm looking at ways to pay for your home improvements. Now in another episode we talked about the home renovations that boost the value of your property, and with more and more of us opting to stay put rather than moving on, it can make a lot of financial sense to maximise your current asset. However, you do need to cost it out carefully and consider where the cash to fund it will come from. The right home upgrades can not only increase the price of your property, but if you build in eco measures, you'll benefit from decreased energy bills too. Your home will work better for you, and you can future-proof your space, so it will adapt as your family grows and their needs change. So let's explore your options for paying for it. A secured loan is taken out against an asset you own, usually your home. They're popular and they're available to people with poor credit history. The significant downside is that if you can't keep up with the repayments, your risk is losing your home. Also, rates are often variable, so the interest you pay fluctuates with the Bank of England rate. Generally, you should choose the shortest term you can afford, as the longer the repayment term, the more you end up paying in interest. Remortgaging is another option. If you're coming to the end of your current deal, you could sign up for a new deal, borrowing a bit extra and adding this onto your repayment amount. Remember that this method means that you'll be increasing your borrowing, so repayments will be more than the full mortgage term. Always seek professional advice if you're considering remortgaging. We can help you find the right people to make this happen. There is a link below that will connect you with our trusted panel of mortgage advisors. If you have savings, this can seem like the ideal way to pay, since you're not committed to long-term borrowing and will be spared interest rates. However, most home projects are likely to require quite a chunk of cash, so this won't be an option for everyone. You might consider topping up with a personal loan. They are popular as they're versatile and they're offered by a wide variety of lenders. One of the biggest positives is that the interest rates are fixed, meaning monthly payments stay the same. There's also no need for collateral, meaning your home won't be at risk. You can shop around for the best interest rates and repayment terms. As with all loans, the longer you take to repay it, the more in interest you'll pay. You need to balance this against having an affordable monthly repayment amount. Do watch out for hidden charges, like early repayment charges or arrangement fees, and factor these in alongside what might seem like an attractive headline interest rate. Equity release is usually only available to homeowners over 55. It allows you to turn the equity in your property into a cash lump sum, and you don't need to have paid off your mortgage first. The main advantage here is that it gives you money to spend now, rather than having it tied up in your home. But of course, that does mean that there's less equity in your home for the future, such as a long-term care cost. And finally, credit cards can be a short-term help for smaller improvements, such as decorating. Shop around for 0% introductory deals and aim to pay it off in full before the usually steep interest rates kick in. Regardless of how you pay it, having the right people for the job will make all the difference. It's not just about peace of mind. Many home improvements require building regulations, and you want to know things are done correctly to ensure the work is signed off at the end. This is essential for when you come to sell. To help you, there's a link below to connect you to our recommended tradesperson in your local area. And join me next time for more home top tips.